Welcome to this week's Market Matters video update for March the 30th. We actually a fortnight since our last video, James. We had a bit of a COVID scare come through the Market Matters camp in the last week or so, but plenty to talk about. Market's been pretty strong since we last chatted. They're having a good day today. A lot of that's to do with the federal budget, which was announced last night. Few leaks coming into that, but the big one was announced last night. We're going to run through a few of the stocks that would have benefited from last night's announcement, kicking things off with cost offsets for low income earners. So those earning less than 126k are going to get a bit of cash in their back pocket in the next few months. Sort of who does that help, and where does that sit in the market?
Yeah, I thought today we'd take an actionable stance around the budget. So stocks that we think will directly benefit from the announcements made overnight by the Federal Treasurer, tax offset. So people earning less than 126,000 will get more money in their back pocket. Stocks I'd look to as a benefit for this. Coles and Woolworths within the supermarkets, apparently the more affluent shop at Woolworths, the less affluent shop at Coles. So I'm a Coles shopper, so I don't know what that says about me, but the less affluent go to Coles. So apparently Coles is going to be the supermarket that will benefit most from the tax offsets there. In terms of the retailers, Super Retail Group would be one I'd call out. They obviously have Super Cheap Auto. They have Rebel, which will benefit from more money in people's back pockets. They have BCF, Macpac, and a bunch of other brands that will benefit from more money in people's pockets. City Chic, CCX, is a retailer of plus-size ladies' fashion. So that could benefit, and then you'll throw in the Dirty Bird, Collins Food Group, as a major beneficiary. Apparently, when you've got more money in your pocket, you buy more Zinger burgers and chicken nuggets and the like. So they would be the stocks first run through that I think would be beneficiaries from the budget, particularly the lower middle income earner benefits there.
Definitely. We've seen fuel prices rocket lately, and sort of there was a bit of a juggling act going on. They weren't going to, then they were going to, and they sort of have now delivered a cut to fuel excise tax. James, I know fuel over the last few weeks has been well over $2. Who benefits out of these automotive-related stocks, I guess, from lower fuel excise?
So I'll caution this because it is only a 6-month benefit, right? So when you're thinking about valuing equities, you're looking longer term, and that's what really flows into equity valuation models. That said, anything the automotive related stocks will benefit. AMA Group, AP Eagers, which is APE, they will benefit. We own Smart Group, which is a novated leasing, salary packaging and the like. That's probably drawing a long bow, SIQ, but it's a stock we like. In terms of the car parts sector, Bapcor, BAP is a position that you've got in your emerging companies portfolio. We've bought it recently. We think it's really good value down here, and I'd call that ARB Corp. So it is a four-wheel drive accessories business. I was actually at the four-wheel drive shop yesterday, incidentally, talking about just getting a new roof rack put on the ute. But I was talking about supply chain issues with the guys down there, and they were suggesting that they have been a real headache in the past couple of months, but they're starting to ease now. So if you get that confluence of greater demand at a time when supply chains ease, then that is a positive and a win for those automotive retailers. So that would be the main beneficiaries. I should throw in Ampol as well as as a beneficiary from petrol and the sale of petrol and all the other convenience goods that you buy when you go into a petrol shop.
Definitely. Infrastructure is always a big talking point come budget time. They've delivered again, as naturally they always do. I guess federal budgets. I haven't seen a federal budget where infrastructure hasn't been touted as a winner. Where's that money going to be spent, and who's going to benefit from that?
It's always, I find this always interesting because all these big infrastructure spending occurs, and there's always these companies that are going to benefit from it. but it's delivering it and delivering that infrastructure in a profitable manner. So we know margins are really tight in this area. You've got these the confluence of factors around rising wage costs, rising input prices, and the like. That when you price a fixed price contract, and then you've got these pressures around labour and input costs, it puts a lot of pressure on delivering those projects profitably. So I'd caution that in the first instance. But infrastructure down a EDI would be the first go-to in terms of that. There was a specific reference to telecommunications infrastructure in rural areas. So we've got Service Stream in our income portfolio that would cater to that. So we had that management team in about a week or so ago, and they articulated a pretty strong case for that stock going forward. It's in a turnaround phase. They do all sorts of critical infrastructure. Telecommunications is just one of those areas. You've obviously got the Lendleases of the world and the like, but ultimately I think infrastructure, 120 billion, I think the number was over 10 years. So it's a reasonably sized investment. And then on the transport side, so Downer fits in the road and rail side as well. So there's the infrastructure side that I think is it's easy to point to companies that benefit from it, but it's another thing for those companies that deliver on time, on budget, and make money out of the infrastructure.
Definitely. Finally, James, what do you think was lacking in the budget? What's some loopholes or some holes in the market that were not filled by this budget, James?
I think look, they did a pretty good job on filling everything. I mean, the criticism would be that they've put a lot of new stimulus into an economy that's already running hot, and that will underpin an increase again in inflation, and then that will force the RBA to hike interest rates sooner than they would have otherwise hike them. I think from the other thing I'd call out is labour pressures and supply chain. I know I touched on it in terms of four-wheel drive accessories and the like, but I don't think there was anything there to address those. So labour's a real big one. They're forecasting an unemployment rate to drop to levels not seen since the 70s. So in that environment, their labour's still going to be tight, and they're not forecasting a big uptick in immigration. So in that instance, those companies that have struggled with labour issues will continue to struggle with labour issues. Supply chain is still going to be an issue. While our borders are opening up from a state by state as well as internationally, that will ease that somewhat. I think that was one of the key omissions that I thought were left out of or wasn't addressed in terms of the budget overnight. But all in all, I thought it was a pretty good budget. They're spending now, they're buying votes, there's no doubt about that. The cynic in you says they're giving some, a big bag of lollies now, and they'll take them away pretty aggressively. When I do that to my kids, they're happy to take it, but then they scream when you take it away. So hopefully the market doesn't do that. But overall, a pretty positive budget.
Definitely approaching all-time highs at the moment, James. We've got a federal election inbound as well. Plenty to think about and plenty to talk about in the ongoing reports that we send out to our clients.